Stream's going. Okay, got the cat here, got the dog here. The pet cam is blocking my face.
I love the pet cam, by the way. I think it's amazing.
I'm gonna put them in the middle between Jake and I here, because like the zoom cam, I can't fix the frame, so it brings my dirty closet into free view. So I tilt the camera this way. Hello, everyone. As you see us going through our chit chats, welcome. This is a special Saturday show. I've got Salvatore and Jake2B on the show for this Saturday. Every show this week is Speculation Station, and it will be until we can finally get some damned S1s showing up. I want to thank everyone for joining me. It's gonna be pretty much a Sal and Jake show, and I'm gonna let them kind of run with it. If you guys have questions, we'll try to get to them. There are a lot of chats already in here. I hate feeling like a weird plug, but I'll see them if you send a super chat. So by all means, send a super chat. I might not get to them when you send it, but we'll see the bright colors when I go through the chat and I look for questions later. Otherwise, I'm squinting at the chat trying to find stuff that's relevant. So yeah, I'm gonna let Sal and Jake kind of take it away. Sal, want to jump in first and monologue like an arch villain in a movie. So I'm gonna let you have at it, man. Welcome aboard, everybody.
Thank you very much. Great to be with you guys today. Great to see you, Jake. Great to see you, Houston. I'm not doing a face reveal yet until we calm down the situation of mainstream media and Doug Sifu. London's a small place, so I'm very noticeable. So yeah, I've been invested in Bed Bath since last August. However, I've been watching it since the January 21 GME squeeze. I've been around for a while on Reddit. My username was Phantom Black 691. Phantom Black is the color of the first Audi I ever bought. It was an Audi S8, and I love the color, so I've always loved the name. I got banned on Reddit for, going to war with the moderators of Wall Street Bets who are suppressing, certain narratives and pushing propaganda. So you won't find me on Reddit anymore, but I'm fully aware of everything up to date that's been going on. I bought into GameStop about a week or two before the sneeze, and then rode it all the way down, watched everything unfold, and it didn't sit right with me that they had to turn off all of the brokers and put them on PCO. It looked like a very weak move. And since then, all of the reading, all of the great DD that's come out on Reddit, on all of the platforms, YouTube and everywhere, has just pointed to the direction that there's a huge mountain of short positions hiding, and what we can see is the tip of the iceberg. And as a result, I'm continuing to research, continuing to learn, and of course, continuing to invest. Currently, my biggest position in my portfolio is Bed Bath & Beyond. And I'll get into why I got into it and what's given me such unwavering conviction, as I like to say. So I read a lot into Ryan Cohen. I read a lot into his history at Chewy, his upbringing, and can't really know where you're going until you know where you've been. So if we look at Ryan Cohen, his father Ted Cohen ran a company importing glassware from France. It was called Empire Trading. So Ryan's grown up seeing hard work ethic. He adopted it. Ryan Cohen eventually started a jewelry business with his friend Michael Blake Day. This didn't really do too well. Didn't come to fruition as they expected, simply because they didn't have the experience and the passion for jewelry. However, in 2011, they started Chewy, and we know how that done. When he was seeking investments for Chewy, Ryan was turned down by hundreds of investors, banks, institutions, all turned him down, until he met Larry Cheng, who saw value in him, and as a result, they still work together to this day. In my opinion, Ryan Cohen is a man who's self-made. He takes people with him, and he focuses on the long term. After a successful 8 years of him bringing Chewy to be one of the biggest IPO sales ever and acquisitions ever, he left the company and eventually moved into GameStop. He moved in with a strongly worded activist letter and 86 million cash. He won this venture, and we remember all of the events leading up to January 2021, and I think that's where Bed Bath started coming into the play. So what's interesting is we were discussing the other day that you don't go from starting up a pet company from scratch, building it, selling it off, to suddenly becoming an activist investor over the course of 12 months or 14 months since he sold his position in Chewy. So the fact that he decided to do such an activist approach, and he done it with such confidence, a well-worded letter, a proxy fight, it shows that activism was his choice before he even started doing it. And this is why I believe he's an activist investor more than just a GameStop CEO, which is what everyone would like to present him as. So if we go back to January 28th, 2021, we saw, GameStop was ridiculously rising in price. It hit intraday high of $483. And I don't think he ever expected, this level of mainstream media attention, this level of worldwide investments pouring into this. I think he saw the opportunity. He targeted as an investor, as an activist investor. Once it spiraled out of control, I believe that it changed his course of his plans, and he's had to realign it, and potentially it's going to change the whole market mechanics that we see today, because it exposed all of the short positions and their over leverage. So on January 28th, 2021, Robinhood stated that they would restrict all new customer purchases in 8 securities. They were AMC, BlackBerry, EXPR, COS, Naked, Nokia, and of course, GME and BBBY. All of these stocks were put into PCO, and the SEC staff report reported Bed Bath's short interest was 66% at the time. They reported GameStop at being 122%. Dillard's was at 77%. So a lot of these companies had significant short interest prior to January 2021. Around that time of the sneeze, Bed Bath went from around $16 to just over $53 intraday high. And this is important because it highlights the basket theory, the theory that short sellers have been using a group of stocks in an ETF to short multiple stocks by proxy. And since then, we've seen correlated price action in all of these stocks, and this is without any news or fundamental changes. The group of stocks have been trading without natural market movement, and they're out of the scope of natural price discovery and true supply and demand. When these stocks go up, they blame retail investors. When they go down, they blame retail investors, which if you've done enough research, it's evidently a lie, especially when the majority of our buy orders don't make it to a lit exchange and they don't have any impact on price discovery. We fast forward to June 2021. I mean, did you guys want to discuss anything before I carry on? I don't want to
do your monologue, yeah.
Yeah, okay, wicked. I just interrupted. Is there anything you want to discuss or add that? So June 21, Ryan Cohen gave a speech at the GameStop AGM. He said, "We're trying to do something that nobody in the retail space has ever done, but we believe we're putting right pieces in place. We have clear goals, delighting customers and driving shareholder value for the long term. The management team and refreshed board will remain totally focused on these goals at all times. We know some people want us to lay out a whole detailed plan today, but that's not going to happen. You won't find us talking a big game, making a bunch of lofty promises, or telegraphing our strategy to the competition. Thank you, everyone. And as my dad would say, buckle up." That was in June 2021. If we fast forward to the 1st of November 2021, just a few months later, Bed Bath was moving from $12 to $25 post-market, 100% gain, and this was on news of their accelerated share repurchase program. At the same time, GameStop surged from $45 to $63. This is a 40% increase on no news or material change. At the time I remember watching it, mainstream media were putting out articles about the NFT marketplace to justify the movements because the GME board don't talk to paid propaganda sources. I checked some subreddits, and it was speculated to be due to Bed Bath's accelerated share repurchase program. And this inexplicably linked price action suggested the basket was highly active, and I believe this is where Ryan Cohen saw the opportunity to use short sellers' own leverage against them. At this time, Ryan Cohen had no interest in any other stocks since September 2020. He even only follows GameStop on Twitter. Now all of a sudden he had an interest in Bed Bath & Beyond and baby merchandise. We move forward to January the 13th, 2022. Ryan Cohen begins building his stake in Bed Bath & Beyond. And his first purchase was 1 million shares at an interesting price of $14.7690. So we've got a 69 and a backward 741. This is on the SEC filings. If we can have a look. He continued to accumulate this position, and he also purchased long out of the money call options until March the 3rd, 2022. So when people say, it was a quick swing trade, he just got into it and got out. Well, Evidently, he was building the position over 2 months. He used Icon's proxy solicitors to fight for this. And this is a big part of my thesis because I believe that Ryan Cohen is a long-sighted, serious activist investor. He's got a tenacious drive to success and a strong track record. His tweets show that he holds admiration for Icon, and he holds a strong disdain to C-suites, corrupt C-suites, and overpaid executives making millions in risk-free compensation. And if you think someone with this strong track record of controlled capital allocation and frugality, to date, he hasn't touched the majority of the $1 billion cash on hand in GameStop. For someone of this caliber to invest a large amount into a company using Icon's proxy solicitors and a well-researched letter, that shows to me the serious nature of his intention. The decision to allocate capital to a project isn't taken lightly with a short-sighted vision. If we look at the numbers, he invested 86.1 million into GameStop initially, 10 million in March 2022, and 10 million in June 2023, 106 million total to date. His initial investment into Bed Bath was 121 million. That's 50% more than he invested into GameStop initially. And I think that highlights to me the seriousness of his endeavor and evidently the long-term vision that he had with this. 6th of March 2022, RC Ventures issue a strongly worded letter to the Bed Bath board. I remember initially the letter wasn't considered genuine. However, it was soon confirmed by the SEC filings. Now, what was interesting around for me at that time was that a man who had previously tweeted cryptically, he doesn't like public engagement and telegraphing business models and strategies. He started tweeting very openly. He said, March the 8th, sent a letter to the BBBY board, got no response, sent email to CEO asking for discussion, haven't gotten a prompt response, too busy talking to overpaid consultants. March the 9th, he tweeted, finally got a response from BBBY. Sure, many of you have read the whole letter. However, it is worth rereading it, especially to understand and emphasize some key points. So I'll read out a few of them now. As evidence, we point to the company's disappointing shareholder returns and perpetual underperformance across every relevant time horizon. He goes on to say, we cannot imagine Bed Bath. Sorry, guys, this monologue is giving me a dry mouth. He said, we cannot imagine Bed Bath's board of directors is wedded to its current strategy when the board of independent members have made very few open market purchases and appear to hold less than 0.5% of the company's shares in the aggregate, most of which has been at the shareholders' expense. He continues on in the letter, and there's multiple mentions of shareholder value and transferring value to shareholders. The tone is serious, and he wants to hold directors responsible for shareholder value. His long-term vision was also evident in the wording that he used to describe the company. He referenced Chewy as the ultimate destination for pets. He suggested that the board seek to monetize the ultimate destination for babies, and this parallels his words when he wrote to the GameStop board, and he mentioned maximizing shareholder value by becoming the ultimate destination for gamers. Shortly after this, there was a barrage of direct tweets. March the 15th, short sellers are dumb stormtroopers of the investing galaxy. March the 16th, good use of taxpayer dollars is the government cracking down on hedge fund short sellers. March the 22nd, I put my money where my mouth is. At this time, it's clear to see Ryan Cohen was unhappy. He was breaking out of his ambiguous cryptic tweets to give direct messages targeted to short sellers. We all know that short selling comes with infinite loss potential. March the 31st, he makes 3 tweets in a day. He says, I was born to work. Children and animals must be protected at all costs. And then he says, who is more reprehensible, hedge fund short sellers or overpaid consultants? Very direct, very serious tweets. March the 25th, the Bed Bath board give Ryan Cohen 3 board seats and they enter into a cooperation or standstill agreement. So he's won his proxy fight within weeks. This is how quickly they submitted to his needs and his requests. 29th of June, Mark Tritton was fired as the CEO from Bed Bath & Beyond. Achievement was unlocked that day. The overpaid executive is out. Let someone else steer the ship. Ryan Cohen was definitely behind this. Swiftly followed by tweets showing RC's disdain for shareholder losses. The same day he tweeted, I'm sick of seeing failed executives make millions in risk-free compensation while shareholders are left holding the bag. July the 6th. In general, when an executive gets paid millions of dollars and leaves a company in shambles, they should be forced to return the money. 1st of July 2022, Sugove buys in 50,000 shares at $4.61. This is a position that a lot of us own much more than at the moment. However, for a CEO to put in $230,000 of her own money into the company was certainly a decision influenced by Ryan Cohen. Then we move forward to 12th of August 2022. Teddy Holdings LLC files the following trademarks to cover the categories of comforters, throws, towels, bed blankets, bed sheets, duvet covers, shower curtains, pillows. All of the specific categories that Bed Bath & Beyond stock. Very specific for someone who 4 days later was about to sell their entire stake in Bed Bath & Beyond. 4 days later, exactly what happened, he sold his entire stake. This is when the media started the narrative that RC was making retail bag holders, and they branded him as a short swing trader. The same guy who to date hasn't sold a single share of GameStop, despite having such a low cost basis. At the time, Wall Street Bets was heavily pumping the stock, and they assigned a bot to call him the rug chief anytime his name was mentioned, which was very strange to me for a community that celebrated loss porn. Jake Freeman was hailed a hero, and somehow he managed to sell the morning before Ryan Cohen did. He's had zero investigations or negative sentiment from the mainstream media, but Ryan Cohen tried to fix the company, filed accordingly, and has been villainized. In my opinion, this was all a ruse to make the large percent of retail investors lose faith in Ryan Cohen, and to some extent, I'm sure this has worked. Do you guys want to go over everything?
You keep going until you're done, and then I got some too.
Okay, that's cool.
Unless you need a break. If you need a break, I can give you a break.
I think I'm coming down with something as well. I haven't been too well today, but yeah, that's fine. Okay. So, we're at a pivotal moment here. He sold his entire stake. And if we look back at his original letter to the board, he says, "It is important to stress that we do not place significant emphasis on any one quarter or any one year when evaluating a business. We do not criticize the board of directors and management team when they are quietly laying down a foundation for future growth and value creation. To the contrary, we are maniacally focused on the long term." The key words there, maniacal focus on the long term. For that reason, it's incomprehensible to me that he didn't anticipate this fight and prepare accordingly. And this is backed up by the trademarks being filed just before he sold. I believe they're a contingency plan that in the effect that the board failed to implement actions and fix the company, he would be able to take it over and fulfill his activist venture. When Ryan Cohen sold his stake, he sold it all for approximately $187.5 million. 3 business days later, Sixth Street Partners arrived with $375 million, exactly twice the amount. And this is while the stock price was tanking and the negative sentiment was rising. The nature of this loan was a FILO, which is a first in, last out loan. When I looked at the timing, the amount, and the nature of this capital investment, it was very interesting to me. A FILO loan is commonly used in the context of leverage buyouts and other complex financing situations. This FILO loan was also Gustavo Arnold's last corporate action for the company before his suicide. Sixth Street Partners manage approximately $65 billion of assets under management, and they have an above average performance record. Ryan Cohen's value of his sale is close to 50% of the amount offered to Bed Bath by Sixth Street. If we look forward to where we are now, Sixth Street are now the debtor in possession. They're the most senior secured creditor, and they own approximately 87% of the senior secured debt. This isn't a coincidence, as they've strategically allowed JP Morgan to be paid off in full before them, and this indicates to me that they have strategically positioned themselves during the Chapter 11 reorganization. I still believe that their role as debtor in possession and the change of control potentially through a credit bid providing debt for equity will be the turning point of the Chapter 11 and ultimately our outcome. 12 days before Ryan Cohen sold, he tweeted, "Ask not what your company can do for you, ask what you can do for your company." I remember some people perceiving that to be related to DRS. However, personally, I see it as providing capital to the company, as this was 12 days before selling his entire stake. And the level of wealth he has, $69 million extra, it wouldn't make much of a material change to his lifestyle. So I cannot see it being to make the profit on short swing trade, as everyone says. If we reference the last message, the last sentence of his letter to the board, he says, "I am not in a position to join Bed Bath's board and personally drive the initiatives outlined in this letter. This does not mean, however, that RC Ventures will not seek to hold the board and management accountable if necessary. If you put together all the information that I've mentioned so far, I believe he provided the company a route to success. They rejected his advice. They put him into a restrictive standstill agreement. So by August, the best thing he could do was sell his stake, provide 3 directors, and let the board fix the operations and finances and create shareholder value. I believe the debt was provided in a philo structure in a strategic manner to ensure that in the event of bankruptcy, he would be poised to take control of the company at the critical stage. And that's exactly where we are today. So yeah, I'm done. You guys can carry on, discuss, give me some feedback.
Yeah, no, I think that was a fantastic introduction. And yeah, unless Houston, you have something you want to say, I can just keep the torch.
No, I mean, last night on the PP show, I mean, that's, I was talking about how I was completely burned on my call options when Ryan Cohen sold everything. And I was like, dang it, he must have just, cut his losses with the board and that was it. And then, by that winter, after looking into things, I was like, oh, wait, no, there's something squirrelier going on. Like, he had a plan B. Plan A didn't work. And he was like, fine, we're going to do it the hard way. I offered you the carrot. Now it's time for the stick. And I fully believe that he's behind the dip and philo financing, and he is in control of this as it comes out of bankruptcy. Anyway, Jake, you've been digging deep. Laid on us.
Okay, thank you. Thank you again for having us. And as Salvatore so eloquently described the situation up until now, I just want to highlight a few points that he mentioned, because it is important to note that, Bed Bath & Beyond did come out in the SEC report by Gary Gensler when he was making the GameStop sneeze report, right? So this isn't something that just came out of nowhere. Not to say, and that, just to even say more than that, you're led to believe that the markets trade on fundamentals and supply and demand, right? And then when the stocks went to position close only, I mean, it doesn't take a genius to realize that they just got caught with their pants down, right? So there was a, like as Mr. Petterfee, the IBKR gentleman had said, the risk was really there, and it could have taken down the whole market, right? So if owning a security that is substantially shorted by institutional parties can risk taking down the whole game, it just goes to show you that fundamentals have nothing to do with it, right? And so, a lot of people try to discredit Bed Bath by saying, oh, it's a towel store, they don't do anything, their financials are terrible. There's a lot of referencing a lot of the Ryan Cohen tweets talking about expensive consultants. There's a lot of historical in the near term from 2017 to 2020 where you can make the case that there was, if not a deliberate attempt to drive this company into bankruptcy and oversaddle them with debt like the typical board members that enter do, there was definitely a deliberate attempt to try to enrich executives at the cost of shareholders and at the cost of the company. Because one of the things he pointed out most attentively in his letter to the board was the disproportionate compensation of the executives compared to the performance of the company, right? So it didn't take a genius to realize that there was something there. If you go position close only, and then you see that Ryan Cohen illustrates in his letter to the board that he wants baby, nothing about him as a business person would tell you that he would just abandon the idea if it didn't go his way. And, initiating the proxy war and then winning so quickly and then ousting the CEO, I guess, within like 60 days or within 2 months of that happening, those are lightning pace things, right? And I'm glad that Salvatore touched on SuGov making a market share purchase, because I felt like that was a moment of alignment where she wanted to demonstrate that she was, of the same style of managerial acumen that he was, and she believed, in putting your money where your mouth is, right? So I felt that was more of a symbolic acquisition rather than anything else on her behalf. And it also was one of those points where it told me something, because if you consider the timeline here, and so my involvement with Bed Bath was before the August run-up. I can't really remember when I first entered, but I held through the August run-up, and then it sounded interesting to me that it just didn't sit right that he just sold and exited, right? Especially at a profit like that, because I have my own theories as to why the price had risen. But it's just not his style. Like Salvatore said, a 64, 69, $70 million profit on a stock market trade makes no impact on his quality of life, right? Like this is a billionaire many times over. You have to put it into perspective. It's like, if you had $100 in your bank account and you found 7/10 of a cent, right? That's the kind of perspective that you have to put towards it. So really, that didn't really sit right with me. And then, then knowing that Sixth Street comes in a handful of days later with a big chunk of money for these guys. And then if you look into Sixth Street and the type of investing that they do, so it was Sixth Street Specialty Lending that had provided the money for the company. It wasn't until a lot later, but I discovered that this is their main type of business, is they find opportunities where they think that there's disproportionate upside. And so they make entries and they try to profit on those, right? And so one of the things that Sixth Street makes money on is on the interest rates on their lending. And then another thing that they do is this type of lending, right? So the FILO loan was right up their alley. It wasn't anything that was, it didn't stand out to me other than the fact that they saw opportunity. And then there's, if you go through the timeline, you enter November. There's a bondholder, a single bondholder, who makes a private deal with the company to exchange bonds for shares and pay the company $3.5 million for the privilege of doing so. That was very interesting to me. And then the following week, or maybe it was 7 days later, there was it was described in an SEC filing as several institutional investors had followed that single bondholder in the same trade and exchanged their bonds for an equity position. So, at that point, it became evident to me that despite the fact that there was a Ryan Cohen exit, there was something happening behind the scenes. And really, the SEC filings tell you the story. And I'm of the position that if mainstream media is telling me not to do something, that catches my attention as, there's an intention there, and I absolutely should be looking at whatever they're saying not to do. And so they've been very obvious to telegraph that intention the whole time. And if you consider what happens with those bondholders converting, then you see that Jake Freeman writes a letter to the board to establish a senior lien on Baby and write up his own kind of bond offering of how the bonds should be exchanged to maximize this sort of value and indicate that he's opposed to a sale of a subsidiary of Baby. He really establishes a lien on Baby. And I believe that he killed the bond offering because subsequently after the institutional investors, the company was trying to make a full-fledged bond offering on all of their short-term notes to convert them, which failed. And they had extended it a handful of times. And I believe shortly after the new year, a few days into January, they finally decided to end the bond offering. But, not until bankruptcy, because these things don't really come out, do we learn from a declaration from Robert, I believe Robert Malone is his name, who's a senior vice president at Lazard. So Lazard is an investment bank and acting as a financial advisor for navigating the company, right? So he reveals that they had been speaking with the company since August or September. By October, they had made an engagement letter and a dealer manager agreement. And a dealer manager agreement was very important because it established a legal entity or one legal entity for any number of affiliates. So any number of folks that wanted to get together and pool some funds together to either acquire this company or take it over and maybe strip the assets amongst themselves and divvy them up into smaller companies, they could operate as one entity through Lazard. So, bankruptcy, I think, was really good for this company because it brought a lot of historical aspects into the limelight. And really, if you would have been trading this company or purchasing to acquire a position in bankruptcy, you had a much better position of knowledge doing so prior to, right? Because, all of this came out in hindsight. But so, look, I am using information that was later available to paint the picture. But in December, we see that Lazard is already discussing strategic Chapter 11 restructuring with this company. It's on the table. They're considering it. They say it may be a good way to, kind of rebrand this company, shed some debt, and make it more desirable for acquisition or whatever they want to do. At the same time, one of Ryan Cohen's board appointees, Ben Rosenzweig, who's a merger and acquisition specialist, leaves the board. We later find out that in the same day or the day after that Ben had left, the company had made a substantial payment to Lazard. And according to their engagement letter, their payments are only stipulated on events. So either they conduct a sale, or they assist with financing or bringing money to the table, or any other sort of middleman transaction that you can think of, Lazard gets a cut. And so Ben leaves, and then a day later, Lazard gets paid. Excuse me, Lazard gets paid. So that was also very interesting to me once we were in bankruptcy, because I felt that Ben left because the seeds were planted. And in January, there was an event or an attempt to do an LBO, I believe. And that had been I believe that was stopped by JP Morgan. So there's plenty of data on it. There's no reason to debate it at this point because so many other things have happened after. But there definitely was an attempt in mid-January to acquire this company through an LBO. There's a lot of PitchBook data to substantiate it, but it was unsuccessful. So, right after that was attempted, JP Morgan issues an event of default on the company and takes over their bank accounts and says that, we're taking cash dominion. The company releases an SEC filing on the matter and says, that we had an ABL loan that, require ratios of inventory to money or whatever. And they were kind of with the holiday season and lacking inventory because shipping had been still kind of in a flux with COVID slowdowns. Their ratio of inventory to loan amount from JP Morgan was upside down. But interestingly, in the SEC filing, they note that was one of the events of default, which they specify and are quite clear, but then they say among other factors, and they don't specify what those other factors are. And one of them, if you look into the credit agreement between JPM and the company, is a change of control. And so I believe that was also what had occurred, that at the same time, there was an attempted change of control that substantiates that LBO data, and JP Morgan had stopped it. And it's important to note that because then the actions of the company from February to April and then in bankruptcy make a lot more sense. But I'll get there. So then after the January LBO fails, there's two significant events that occur in February. One of them is Sixth Street piles in a fresh $100 million. And on the same day, a entity called Hudson Bay Capital discloses that they will provide an at-the-market equity offering for this company. And they basically say, we'll give you $225 million in exchange for such and such amount of warrants. Warrants will exchange for preferred shares. Preferred shares we can exchange for common stock. Cool. The sentiment online was very disproportionately against Hudson Bay. And this really stood out to me too. Much like a lot of the negative sentiment around Ryan Cohen. First, it was, who are Hudson Bay? They really had to dig deep to find these guys in the attic. They pulled some capital group out of nowhere. These guys you've never heard of them. So it really must be bad if this is who they're looking for. Then that very quickly changed to, well, these guys are really going to dilute the hell out of this company, right? Because they're acquiring so much stock and they can convert, and they're going to, because they're going to want to line their own pockets, and they're going to absolutely destroy shareholders, and they're going to give shorts a back window to exit out of by supplying a lot of shares to close short positions, which at the time was difficult to dispute because there was limited information, except for the fact that at the end of March, Hudson Bay had made an adjustment that they would change the strike price on the conversion. So I noticed a lot of what was happening with the company since the failed LBO resembled what I had read probably a year earlier on Reddit about seller boxing. And I'm really glad that I did read it because it gave me a lot of perspective, and a lot of what I was seeing with the stock price mimicked what I had read in my own findings, looking for anything I could find on seller boxing. It was very much according to the playbook. And I believe this was why Hudson Bay emerged to me to be a favorable party to the company and not working against them to just, I guess, dilute them to hell, is because they had provided a lot of this funding. And then they had also said, we'll lower the strike price. The strike price went from $6.15 to $1. And then in bankruptcy, further went down to 71 cents. So, okay, I thought, all right, that's sure. So that's one data point, right? So, but don't forget that Sixth Street also gave them a fresh $100 million at a point where they're already discussing entering bankruptcy or Chapter 11 restructuring for 2 months. Right. And so $100 million to throw in on top of your other 375 is no joke. Right. That's almost another 25. No, that's almost 20%. So these events happened in February, which really showed me that there was an effort to do two things. One, there was support for the company. And although at the time I didn't know it was related to what was being attempted in August and January, but there was support to keep the company afloat. And at the same time, I believe that the reason Sixth Street gave the $100 million and the reason that Hudson Bay lowered the strike price on the share exchange was because they didn't want the company forced into a bankruptcy earlier than they were ready because of insolvency. And I believe that they had set the board or set the chess match to make sure that they were in a position that they were in control of a Chapter 11. And so I would even say that maybe the $100 million Sixth Street provided was unexpected, but it was a liquidity injection to ensure that the company wouldn't end up in bankruptcy before their plan was ready. And so that element of the plan would have been Hudson Bay acquiring the common stock position, and Sixth Street being in a position where they can ensure that they end up in the super priority position in the creditor list. So then also you see that, even though the JPM ABL, which was first in line with the creditors, peaked at, I believe it was somewhere around $1.1 billion, it was significantly paid down by the time they had entered Chapter 11, some of which actually had been paid down by some of these Series A preferred shares from Hudson Bay. They had issued or exchanged those to pay off the ABL, which I thought was very interesting because either that's very charitable or you're doing a lot of volunteer work with real money that you are choosing not to put in your own pocket, or there's some sort of strategic intention, right? So let's fast forward. So Sixth Street then again, at the onset of bankruptcy, so let's fast forward to the bankruptcy. At the onset of bankruptcy, Sixth Street injects another $40 million. So their investment to date has been 40 million, 100 million, and 375 million. So what they do is they make a legal maneuver to get the debtor in possession financing. They move 200 million from the FILO. They combine it with the 40. They're the debtor in possession. Sixth Street also names itself as the administrative agent of the DIP loan. And that's important because it turns out from the SEC filings that you'll read later on that the DIP is comprised of actually 8 parties. And there's a lot of language in the credit agreement for the DIP that says that these 8 parties and any one of their affiliates or anyone that they're associated with can prepare any acquisition vehicle that they like, and they can distribute any or all of their credit obligations, exchange them for any level of ownership in any part of this company, and distribute it amongst themselves or their affiliates through these acquisition vehicles. So that was very, okay, you can say that was boilerplate, but I believe that was very deliberate, especially since you consider that these DIP parties was a group of people. Like it was a syndicate of lenders, right?
Yeah.
And also Sixth Street has permission from the SEC, even though they are a business development company and regulated as such, that they can do these syndicated loans. This isn't something that anybody can just go out and do. You actually need permission from the SEC if you're going to be regulated as a business development company. So Sixth Street does this. And the theme at the time was that, oh, they're only throwing this $40 million because they're trying to throw a lifeboat for their other money. And I thought, I mean, why would you throw more money at bad money if it was a bad investment, right? It just didn't make sense.
Yeah.
Well, come to find out that this is exactly what they do. Debtor in possession financing and first lien or first creditor lien financing is 90% of all of their assets under management, which as of, I believe it was June 30th, 2023, is upwards of $70 billion now. So this is just what they do. So knowing that this is like 9 out of 10 business deals are exactly like this, I mean, that just didn't make sense. That there was no way that I was going to believe that was what they were doing, right? So they provide all this money in open court on the first day hearings, I believe it was, or some point. JP Morgan's lawyers did not know that the ABL was paid until they were standing in front of the judge, and the judge basically said, "You don't need to be here. Thank you. Goodbye." They were shocked. They had actually asked if they could maintain their position despite having a zero balance against the company. They had asked the judge, and the judge said, "No, you're not necessary. Thank you. Bye." So that was another point where it's like, oh, okay, there's definitely strategic intention here. And everything from then on did not seem to me like this was a fire sale or a liquidation. And none of the behavior as such would support that either, especially from any of the lawyers, right? So, you have these dockets now and you have information, and the bankruptcy the court is really in control of the company at this point, right? In bankruptcy, the directors and the executive team isn't really doing as much as the court is and the legal teams are, right? So once you start following the legal representation and how much time is being spent by attorneys who are specialized in acquisitions, stock offerings, IPOs, SEC regulations, mergers, leveraged buyouts, and how many hours of these legal billings at over $1,000 an hour are being conducted in the spirit of these negotiations and discussions, because you have to remember, these attorneys don't just automatically get paid by the company. They do the work, they have to submit the fee statement, and the judge has to approve it, right? So if you're going to tell me that these merger and acquisition attorneys billing $1,000 to $1,600 an hour, amassing, I think it was over 550 hours up until the end of June for merger and acquisition activity, I mean, is the judge really authorizing that payment of that many legal hours at $1,000 or more an hour, just to then liquidate and fire sale the company in Chapter 7 style, right? It was one of these things that doesn't make sense. Then, if you go into the summer, there's a very interesting docket that was the Kirkland & Ellis fee statement for June, and it was released in July, and it's docket 2067. It's, to this date, I believe, the second or third most valuable docket that's come out of this case, because you're introduced to a couple of real expert attorneys, one of which she's named Tamar Donikin, and she's a securities expert, she's a SPAC expert, she's an IPO expert, she's a follow-on acquisition expert, she's a securities distribution expert, and as it turns out that I found out later, thanks to Salvatore, she's also really well-versed in using ICOs, which is initial coin offerings, as securities distributions as well. But she's front and center in a lot of activity, importantly, with discussing Section 16, which is a subsection of the SEC Forms 3 and 4 and 5, right? Which is beneficial ownership reporting if you're a director, and significant shareholder ownership over 5% of a company. So why are you discussing these legal frameworks for share ownership with the SEC if there's not going to be any shares in this company, right? It's the first element that really doesn't make sense. Then there's a lot of language about instruction letters for the transfer agent. And this was the second most important piece for me personally, because the three main reasons that I extensively searched online that you would make instruction letters to the transfer agent are for an IPO, are for a merger, or are for a share distribution. So I thought, okay. And it didn't really make sense to me that if shares were going to be deleted, that they needed to spend so much time on these instruction letters, because from the fee statements, you can understand and you can see that there's a lot of back and forth. There's letters that were sent, there's letters that were received back, and then there's further letters that were sent from the legal team to the transfer agent themselves. So if you're just deleting shares, I don't really think you need to devise an instruction letter to the transfer agent. I'm pretty sure the transfer agent would know how to handle that. But even if you did, I mean, it would be fine if you spent 15 minutes drafting a letter, say, hey, delete the shares, and then you're good. But this is discussion happening over weeks and weeks, right? And these are hours and hours and hours spent by Mr. Zangrillo and Ms. Donikin making these instruction letters. But even more importantly than that, we see for the first time, so Hudson Bay was a quasi code word used as HB, but we see that Tamar is discussing with Hudson Bay about a blocker provision. And the blocker provision is a provision from the Securities Act of 1934 dealing with companies that have greater than 19.99% ownership. So that tells you a couple of things. When the at-the-market equity offering was made with Hudson Bay Capital, in their credit agreement with the company, they had a provision which was called the bankruptcy triggering event. And so what it basically said, it was a protection for Hudson Bay that said, if this company enters bankruptcy, we are guaranteed a 15% profit on our investment. So the company has to go into their cash reserves as a priority administrative claim and issue everything, $225 million right back to Hudson Bay and 15% on top as a guaranteed profit for them. And interestingly, they don't take it because the HB blocker provision in July tells you that in July, Hudson Bay still owns more than 20% of the common stock, right? So they didn't opt for the 15% profit in April when the bankruptcy occurred, which immediately tells me that Hudson Bay's intentions were never to dilute. They were potentially either acting as a proxy or an affiliate for someone else to acquire a common stock position for an ownership change, or they were trying to do it for themselves to just keep however much of this company that they owned, right? But as soon as she was discussing the Hudson Bay blocker provision, it was guaranteed that they had held the shares, because the other thing that happened the first day that this company went into court, so they filed Chapter 11 on Sunday, and Monday at 2 p.m., the next day, they're in front of the judge, and the main attorney for Kirkland & Ellis requests that the judge restrict anyone with greater than 4.5% ownership of this company can't trade. And the judge says, yeah, just so very nonchalant about it, like standard procedure. later to find out that the only reason that you do that is if you're trying to ensure that you can preserve the asset structure and for ownership, or sorry, the ownership structure amongst the assets when you emerge from Chapter 11 to preserve the NOLs. Because if you intend to use the NOLs, the legal language is very specific and very deliberate about how it has to look. And so the only reason that you freeze 4.5 or greater, or actually sometimes they do it 5% owners, the reason you freeze them is so they can't at the last minute dispose of those positions and nefariously act to screw up your ownership structure and then screw up the NOLs. So we know that Hudson Bay didn't at that point. As soon as the fee statement came out, we know that they didn't dispose of the common stock position because they were still subject to the blocker provision. At the same time, we know that they couldn't have disposed of the position before that docket came out because since they didn't take the bankruptcy 15%, they're frozen by the judge. So the only way that you could dispose of a position that was over 4.5% is you have to have a hearing and the judge has to approve it. And then you have to wait 20 days and then you can do it if the judge approves it, right? But we know that didn't happen. So then it's not until 10 minutes before market close, or maybe 5 minutes before market close on September 29th, that Kirkland & Ellis releases their fee statement for the following month. And we had been waiting for that for 5 weeks to see what had happened, because it was evident after that docket 2067 that these were the main attorneys for whatever main parties were wanting to do something with this company, right? So 5 minutes before market close, that fee statement comes out, and then would you have it? The effective date is 10 minutes later revealed, and then there's a slew of SEC filings. There's a new company name, right? So obviously that was very deliberate, and because then once you start looking at that docket, I believe it was 2310. Hudson Bay is just referred to as Hudson Bay. They're not saying HB anymore. And then there's a lot more discussion about the Section 16. There's a tremendous amount of discussion about share issuance. There's discussion about RSAs and how the restricted stock awards for the directors will be managed with new shares. There's just a lot of common stock style discussion happening. And it was very telling at that point that there would be some sort of preservation for shareholders through a few factors. One, because they're continually on multiple occasions doing share counts. They continue to do these instruction letters with the transfer agent. Hudson Bay is directly referred to by full name now as maintaining that common stock position, and they discuss details with them. And all along at the same time, they're still discussing the NOL. They're still discussing how they're going to manage them. They're discussing IRC 368, Section 382, which are subsets of that. So there's a lot of this discussion. And then now we discover on September 29th that, guess what? The effective date happened. Such and such happened. Now the company's named a different name, and everything's fine. But interestingly, though these SEC filings are released and posted to the SEC website on September 29th, they had been filled out and submitted to the SEC on September 18th and September 21st. So this is action in hindsight. So now, it's funny because as time goes on, the narrative for the bear thesis keeps moving the goalposts. First it was there's not going to be any shareholder recovery. Then it becomes, well, you're crazy. There's just nothing going to happen because these other creditors have to be paid first. Then you find out that the bondholders or the unsecured creditor committee, despite having a projected 0 to 2.5% recovery, votes unanimously in favor of the plan. Then if you look through the fee statements, you discover that they've been under NDA since June and they're having weekly meetings with the board. Then you discover now that what's being filed with the SEC is historical information that's at least 7 to 10 days old, right? So now the discussion is, well, since the effective date passed and the documents say that the plan has substantially been consummated, nothing can happen. But you have to understand that as these filings are coming throughout the SEC, they're for events that have already occurred in the past. They're not telling you of events in that moment, right? So I would not be surprised if, on Monday or Tuesday or Friday of next week, there's SEC filings that are dated September 29th, right? Because this is just how these things occur. And, there's a bunch of other things that I can get into to substantiate some of what I've said now, because I missed some of it. Actually, I'll say the one thing, which is Ryan Cohen. He's also been noted as a creditor, which the bear thesis says the best excuse they can give is that it was a typo, because a Redditor that had also made a submission to the court was mistakenly labeled as a creditor very briefly, and within a few hours, the typo was corrected. So then I had asked, well, so why does a just average person get their creditor status corrected with the court within hours, but a multi-billionaire leaves it for 8 months, right? Like it doesn't pass the sniff test, right? And then if him being a creditor was not enough, he's listed as a co-debtor, and he's being sued by counties that the stores still have delayed tax reporting for. And there's, I believe, 8 jurisdictions or 6 jurisdictions that have him as a co-debtor alongside the company and alongside JP Morgan for these locations. And I mean, you can't be a co-debtor, and he's a co-debtor for utilities as well. He's on the water bill or the electrical bill for some of these locations, which you can't do if unless you've either been a guarantor for the lease or you're involved as a director with the company.
Yeah.
You know, and interestingly, as we were approaching mid-September and we were looking for the confirmation of the plan on September 12th for the judge to make the ruling, the night before, or maybe the day before, the debtors had made an amendment to the confirmation, excluding Ryan Cohen from the released parties. You know, and it flew under the radar for a little bit because it's like, well, why would you do that? Right. Yeah. So it turns out that if you look back into the Kroll website, which is difficult to do because there's days where they file 30, 40, 50 dockets, but there's days where, you know, they had made a filing where the main plaintiff, who's, I don't know how to pronounce it, Bratya, I believe, Bratya, the main plaintiff listed in the pump and dump lawsuit, had joined the bankruptcy case and specifically had made a filing with the court requesting him to be removed as a released party. Well, why would you do that? Because confirmation of the plan included D&O insurance, which is director and officer insurance, as well as full liability release for anyone that's a director, an executive, an officer, an affiliate, a debtor, or someone providing funding, which is a creditor. All of these parties that were affiliated with the company get full exemption from any legal proceeding as soon as the plan is confirmed. So that was a tip of the hat to say that Ryan Cohen is involved in this company. And funny enough, ironically, it came from the people that are suing him in the pump and dump. They want the protection in their own lawsuit to ensure that the confirmation of the plan doesn't hinder their lawsuit by giving him release from the company based on the bankruptcy court ruling.
Yeah.
Right. So he's removed as a release party, which means that his involvement in the company is not subject to the protections of the plan being confirmed. Right. So that's a very interesting piece of information that the bare thesis can't really reconcile. Not to mention, one of the more interesting pieces of information is that Hudson Bay Capital, who had acquired the common stock position, Tamar Donikin and Anthony Zangrillo are discussing with Hudson Bay that they're subject to Section 16B, or potentially they may be subject to Section 16B of the SEC regulations. Well, what is that? Well, Section 16B of the SEC regulations is the short swing rule. When a company insider makes a purchase and a sale, or a sale and a purchase within 6 months. So Ryan Cohen, I believe, sold his position on August 18th, and Hudson Bay finalizes their equity offering on February 8th. Well, that's 5 months and 20 days. So why is Hudson Bay subject to the short swing rule with a director if they only made one purchase? Yep. They only made the purchase in February, right? So that led me to believe that they're acting as a proxy or acting as an affiliate on behalf of someone wanting to make an acquisition, but not have their name directly be involved in such acquisition, because that person believes that their name going into the news can impact the stock price and maybe impact the pump and dump lawsuit, right? So it was a strategic move, I believe, by Ryan Cohen to use Hudson Bay to make his acquisition in the common stock to gain control of the company. And I believe the Section 16B issue is the nail in the coffin that really can't dispute that, because there's no one else, no other director of the company that would qualify for the short swing rule, and neither would Hudson Bay, because they still have the shares, because they're subject to the blocker provision. Yep. So through the process of elimination, I would love if anybody could tell me anyone else that would be subject to 16B and be affiliated with Hudson Bay in their acquisition, because that is in the legal language of the fee statement of the lawyers submitted to the judge for payment. So, I mean, if you're going to tell me that they're lying, I think you need to have a different conversation with somebody else. I'm not going to entertain that. Right. So there's a lot of these little pieces that came out over time that, you know, the bear thesis has a lot of impact in the moment when it's presented, because it targets people emotionally, right? And it wants to instill fear and uncertainty in their sort of confidence in what they believe, right? But as soon as you stretch out the period of time that you're looking at, and you evaluate things from a holistic perspective of looking at all of the events in total or together instead of any one event in particular, as time has gone on, the bear thesis, which is uncommon in bankruptcy, but has really lost credibility over time instead of gaining credibility, because you'd think as you wind down closer and closer to the end of bankruptcy, your hopes would be smaller for a recovery. But quite the opposite. As more information has come out, it's become more and more obvious that this was a strategic, purposeful Chapter 11 to shed $960 million annually in lease payments. And a lot of debt, and potentially convert a lot of bondholders, which is another $1.1 billion, into future equity holders of a new company, and have a company that comes out of debt or comes out of bankruptcy without any debt or minimal debt, and can discharge any other debt with cancellation of debt income because of their NOLs, right? And be possibly debt free. And the other thing I would say, just before I end this monologue about Ryan Cohen, the important thing that Salvatore had said is you have to understand the business acumen of this guy, right? This is not a guy to just be told no and quit. So when the proxy battle begun, how quickly it ended and how quickly Mark Tritton was gone, I think was very telling of Ryan Cohen's style. And then to just think that, and 2 months later, after ousting the CEO, he just changed his mind, doesn't make sense. It really doesn't make any sense to me. If he said that he wanted bye baby, he wasn't going to take no for an answer.
There was
right?
that letter around that time. Sorry, there's that letter around that time that Bed Bath & Beyond released that they were still going to be working with Ryan Cohen, right? So like,
he's
it was jettisoning,
after he sold. They said they had reached a constructive agreement. So, there's a lot of little pieces, right, that the bear thesis can't really account for. Like I said, when you look at a more a bigger picture over a longer frame of time. But the idea that this guy had a proxy war, hired Glass Lewis, and then gets rid of the CEO, and then just decides, I'm bored, I'm going to change my mind, and sells his position to just quit.
Yeah.
I don't think so. And then, we find out in the fee statements and in the legal paperwork that there's so much more to this than has been publicly revealed. Bankruptcy has been the best thing that ever happened to this play and to this company, because it really, not only did it set an end date as to when things must happen by, because obviously bankruptcies have to conclude, but it really brought a lot of things to light, because a lot of legal disclosure had to disclose a lot of what had been happening historically, right? Which has been really interesting. And then you find little tidbits like Hudson Bay being subject to the blocker provision and the 16B short swing. You got to reconcile those things. If you're really going to tell me that there's going to be no shareholder recovery, you're going to have to convince me that Hudson Bay gave the company $225 million 2 months after they already were discussing entering bankruptcy, didn't sell the shares and want their 15% guaranteed profit, and now is just kind of hoping and hanging around that there's going to be some sort of recovery for their shares. Come on.
Yeah, the fact that a bankruptcy, a quick Chapter 11 like this should take 18 months. I mean, that's just how it goes. Like, you just gotta do this stuff. You're trying to figure. You're in shambles because your company doesn't have any money. You have to declare bankruptcy. Talent is leaving. Like, you have to hire these lawyers to come in and kind of sort through everything. This bankruptcy hit the ground running. Like, there was somebody with a binder and folders that said, "This is what we're doing. Follow that plan." And
absolutely.
When this happens in court, flip to this page, do that. And they had every twist and turn already mapped out. There's no way that anyone's going to throw, what? So it's 520 million. Is that about what Hudson, what 6th Street threw behind it? Somewhere around there total.
547.
547. And then you got 200 and whatever million from Hudson Bay. You don't throw that kind of money into a bankruptcy thinking, "Oh well, it's all gone now."
Yeah.
Right. And if you're doing go back to June when we have the stalking horse bids, I was totally thinking like, oh, there's going to be a buyout. Stalking horse is going to take this company and that's going to be it. And they're splitting off Bye Bye Baby. They're splitting off Overstock. It was just for IP. So if you're just selling for IP and not to do a buyout, like SAS Airlines just had a buyout of their stalking horse, 9.8 billion or whatever it was. Shareholders get dip doodle, right? Because someone's like, I bought the company, the creditors and we take it. The rest of you are screwed. That didn't happen here. No one bought the company. And if you read the IRS rules, like the ones that the shills love to throw at me, is a provision under, was it 323? I can't remember the exact number, but they like, oh, look at this example on the Cornell Law website, and it talks about how, you know, if there's a buyer, blah 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 blah, equity holders get nothing. I'm like, there's no buyer. No one has made a bid on the company, so you can't use that as your example because this is creditors accepting equity in the company, and if creditors accept equity in company, they can only accept 50%. The remaining shareholders get the other 50%. Like, oh no, there could be other debtors. Only if there's a buyer, because they wipe out the existing shareholders. There is no buyer in this. And so it's like the company lost $2.78 billion last year. That's a lot of NOLLs just for 1 year of losses. And they've been compounding losses year over year for 5 years now. So you know, they'll be like, oh, but you can only like get $600 million in NOLLs. No, you can't. You get all of it, baby. It's like there's no buyer. There's no equity going into this company from a new buyer. Therefore, you can't cancel any of these NOLLs along the way. So the play is we want the NOLLs because we're going to reverse merger somebody into this, and they're not going to pay taxes for a decade. That's the play.
Yeah. And so, you know, when people say that, you know, well, who would even buy a shell company anyway? What's the point? It's a waste of time. Well, not really. I mean, there's a lot of benefit, right? And so the IP sale, the most interesting thing for me was, like you said, there wasn't any buyer for the underlying business, but also in the IP sale, they did exclude trademarks, especially for baby, right? There was some IP that was being given, but some trademarks were being held back. Right. So if you're going to have a liquidation style where creditors are not getting full recovery and they're hoping to get every last dollar they can, well, you can't really exclude valuable things if you're going to be giving them the shaft, right? So that, you know, there's been many points along the way that haven't made sense.
And as we talked about last night on the PP show, you know, people were making note that Dream on Me was the second highest qualified bidder. So if what you want is you want cash recovery for all these creditors, why aren't you taking all the money? What is it about this?
So me and Jake had worked out a few weeks ago that it looks highly likely that it's a shared service agreement between Dream on Me and the company. And if we look at Overstock, it was 14 hours. That's how long it took them to rebrand themselves. They've done it within 14 fucking hours. We still don't have buybybaby.com. It says coming fall 2023. That alone shows you that the deal isn't done. It's not complete. And in terms of the second highest bidder, it's the trustee that picks the bidder. The trustee is 6th Street. The US trustee is the bankruptcy judge. However, 6th Street let Dream on Me as the second highest bidder. They had to meet 26 requirements to be a qualified bidder at this stage, right? So they've already met the 25 qualified requirements. There was 150 interested parties. If you're a value maximizing bankruptcy, you would have at least found someone that would have bid higher, but they didn't, and it was strategic and it was purposeful.
How much was the bidding wins total? I forget the total amount. It was like 20 million for Bye Bye Baby.
15 or 20, something like that. But
21 and 15.5, I think.
Than they made from both the IP sales.
Yeah, so that basically matches about what the DIP facility was, right? The DIP facility is 40 million. So they got your guaranteed payback on that alone. So,
Well, docket 2040, 6th Street said that they were interested in Baby on a standalone basis. And it's the same 6th Street that we said turned up 3 business days after Ryan Cohen sold with exactly twice the amount in a FILO loan. And before Ryan Cohen sold, the company said that they were communicating with multiple external lenders. So the agreement with 6th Street would have been discussed prior to this. It's not a coincidence that they've ended up in this place. They currently own 412 million of the remaining secured debt. That's out of 473. It's strategic as fuck. They wouldn't let JP Morgan be paid off so they can salvage the remains back in Chapter 7. It makes zero sense. It's all strategic. 150 days.
it's just diabolical too. They're like paying off that debt with JP Morgan, just not telling them. So they have to show up in court, find out that way. That's just like one of the meanest things you can do to one of those nerds. So
I had the joy of being able to watch that court hearing live. It was spectacular. There's so many little elements, right? So 6th Street also being the administrative agent, they are in control of even the affiliate parties, right? Or any lenders that want to convert obligations for equity. 6th Street are in the driver's seat making those decisions, right? So they are the representative of all the creditors anyway that are going to be making these asset distributions too, right? So they've been strategic and purposeful since day one. you know, you could make the argument maybe if it was only 40 million that they threw in, but to throw in 40 million after 375, after 100, you know, come on, like that doesn't make sense.
Yeah.
Yeah, 100%.
Yeah, the only other bear thesis thing that they say is it's illegal because how can you break federal law to pay and save shareholders when you have unsatisfied creditor claims? And it's like, come on. Like you don't know what the state of the creditor claims are because all you have is the public information, right?
And
what's on the NDA.
And the plan says everyone will be satisfied. And and if everyone's gonna be satisfied, we're a class. We're class 9. And so if they take all my equity away from me, I'm not satisfied. So they lied in that document.
Yeah.
They said specifically said
they also applied for Rule 114. Oh, sorry, Salvatore, go ahead.
No, I was just saying $2.5 billion are not going to go to waste of NOLLs. You know, the IRS want that. The equity must be preserved to get that. And this is exactly how Warren Buffett took over Berkshire Hathaway, was utilizing the NOLLs. And we know Ryan Cohen likes to call himself Warren Icon. So I think he saw the $1 billion share repurchase and said, you know, I can use this to leverage the company in the future alongside the rest of the carry forward debt.
Yeah. And the other thing you'll notice in the more recent bankruptcy dockets, especially the statements of law governing the plan, you'll notice that they applied for Rule 1145, which isn't boilerplate language, which is something you have to request from the judge, and they're including it in the docket language. So the judge approved it, which is the narrow exemption window of the new security registration with the SEC, so that you can formulate your new ownership structure before the market can manipulate the valuation, right? So you can enter the market at the valuation you intend. So they have the section 1145 or Rule 1145 exemption. So that's what we're waiting for, you know, so that allows the replacement equity that will be distributed for legacy shareholders to be not disclosed. And then eventually it will be revealed. And then the old equity will be listed. And then the replacement occurs.
Is that the one that allows them to basically establish distribution without having to seek SEC approval on it?
Yeah.
Okay. Yeah. That's
Okay. I've got the rule
because they say that the equity interests that would be given are non-voting interests, because otherwise you'd have to have shareholder vote and approval. But having equity interests that are non-voting plus having the Rule 1145 negates the shareholder vote, and you can just basically dump it on them.
That completely assuages, I can't say that word, assuages or assuages, whatever, negates my fear of the fact that you know, you could have a really complicated S1 gets filed, and then you have to wait 45 days for the SEC to pick through it and approve it, and they can reject it and say you have to do some changes. So if this case, if this rule is enacted, they can make as complicated a distribution plan as they want, file the SEC and be like, that's what we're doing. And the SEC goes, all right. So if they wanted to go blockchain, if they wanted to split off into 5 different companies, if they wanted to, you know, you do a cash buyout here, distribution there, they can do any weird, convoluted, complicated thing they want, and they don't have to wait for the SEC to give their stamp. I like it.
Yeah, and they don't have to wait for anyone's permission.
Yeah.
It's a very, very lucrative loophole.
Yeah.
And, you know, it got mentioned to me a few months ago, and I've always found it profounding that, you know, it has to be in the context of a debtor in possession in Chapter 11, and they can completely circumvent Section 5 of the Securities Act, which is amazing because we know the SEC, look at their lawyer that they had in court. The guy was a mess. He was having porn withdrawal symptoms in court. He was just a big blubbering fucking fool. And this is the best that they could send to court. So it's great that they're not involved.
Yeah, it's a remarkably orchestrated play. It's actually very, very interesting. In hindsight, I believe it will be written about because it was the methodology was quite impressive. I'm equally excited to see where it goes as I am to see how it all happened once everything is out in the open. Because it's very interesting to me.
Oh yeah,
159 days in Chapter 11. You know, the average Chapter 11 is 17 months. They've just done a $5 billion debt down to 1.5 billion within 159 days. This is strategic and purposeful. And if you look at the proceedings,
1.1 of that 1.5 is bondholders.
Yeah, exactly. And then 87% of the rest is Sixth Street. So who owns the bonds? Who owns the Sixth Street debt? Somebody's going to take the company for 1.2, 1.3 billion, eliminate everything else, get 2.5 billion in NOLLs, have a huge army of retail investors who are also customers, who will contribute to search engine optimization, who will buy and review your products. It's a fucking win-win scenario for any well-capitalized acquirer.
Exactly. And on the opposite side, if Ryan Cohen were to take this company, give us fuck all, then you have, millions of investors who are like, you know what? Screw GameStop. Like it would destroy his entire cult of personality that has allowed for this drive of shareholder value in GameStop and any potential plays that he might be involved in. So if you were to like cut our nuts off in this, that's basically what Adam Aron has done at AMC. He's poisoned the well there, and people just aren't listening to him anymore. They're like, well, everything you've done so far has fucked us. Yeah.
That's why you invest in people, because no matter how good the business idea is, if the execution isn't done right by the directors and the people driving the initiatives, then it will fail ultimately. And Ryan Cohen, if I think about him and his history, he is much better suited to run Bye Bye Baby as a category than the GameStop. If we look at pets and animals, the empathetic nature of the customers is very similar. When he had Chewy, they were giving out pet portraits on the pets' birthdays. They had 24-hour support lines for pet parents, as they called them. It just makes sense. Teddy and Chewy are synonymous in nature. They're very similar. And you wouldn't buy a premium tier domain like teddy.com just to sell books for $50 for a set of 5.
Yeah.
It makes no sense.
Yeah. And filed the trademarks that Teddy has filed as well. You can't just file trademarks and not intend to use them, right? So if you're filing for extensions for use, eventually you do have to use them. And the Teddy trademarks are expansive. The terms of service are also much more expansive than just a set of books. Obviously, there's more happening here, and it's very exciting. I'm very excited to see how it'll go.
The trademarks, I would have been concerned if they were suspended or dormant or inactive. To the contrary, they've gone live. All they're waiting for is a statement of use. And on May the 11th of this year, he filed them in the UK, same categories. They're live in the whole of the EU, US, Canada, and China. So if you go to the WIPO website, you can search Teddy Holdings LLC. You'll see the amount of countries it's live in. Like, this is going to be a global commerce company, and people that have failed to see it have got very short-sighted vision. They lack the peripheral vision required to see what this man is building, because one company alone cannot defeat short sellers.
Yep.
You can't take a market cap with just get used games. It doesn't make any sense.
Yeah. It's remarkable to see how it all played out. Even looking back to with the timing. So shortly after, Bed Bath enters bankruptcy on April 23rd, and then GameStop amends the credit agreement on, I believe it was May 11th or May 10th. It was either the same day or the day after or day before the Teddy trademarks for the UK were filed. So GameStop made a significant amendment to their credit agreement, which you have to consider, considering the macro environment, the interest rate environment. It's not an easy endeavor to want to make that expansion, but they go from a $420 million ABL to a $500 million plus a $250 million letter of credit, plus another $50 million for short swing or whatever they called it, plus a sub facility for Canada, plus a sub facility for Australia. So there's obviously plans here for distribution for an omni-channel retailing experience. I think he wants to somehow integrate them, to some extent. We'll see how it all plays out, or maybe they'll be affiliate companies. I don't know.
There's the Japanese term for companies that are separate, but they've got like relationship. Yes, thank you. Very much because we could set up for that. You've got this giant logistics and distribution network, and you have 3 or 4 different companies that have brick and mortar and online, and they can all utilize that same network without being the same company. It's
Jonathan Johnson has written about this extensively. He's very interested in kairetsus and a set of companies that have got interlocking interests. It's an amazing concept, and a lot of the Japanese economy relies on this. I think from Mitsubishi and I think Toyota as well. Mm-hmm. So it's a proven, tried and tested business model. And it makes sense. And I was extremely excited when I saw Overstock were involved in this. It's no coincidence to me that a company that's had historical records of short selling abuse, and they won. They've got the legal precedent and they've got the platform via BSTX to defeat short sellers. And, they were on Reg Show for 800 days. And Patrick Byrne, Jonathan Johnson, they took the fight to the SEC. They took the information to the FBI. And ultimately, T0 wiped it out with the dividend that they issued. However, short sellers got a way out because there was a cash alternative offered, and the dividend was issued via Computershare, their transfer agent at the time. However, even after their price went from $200 to like $120 plus, they was tried to, the short sellers tried to sue them in court for months afterwards, and they failed. And that legal precedence is amazing, and I think that's why Overstock are here. And I actually believe that GameStop might acquire Overstock themselves. Current market cap is around, I think, 700 million or less. GameStop have got $1 billion cash on hand, and this Marcus Lemonis, who's recently joined the company, he just joined and he just puts in 500,000 straight away into shares. Just similar to Ryan Cohen, he's putting his money where his mouth is. And I think perhaps this is part of the bigger play here. I think maybe Jonathan Johnson is going to step down and move into politics, and Ryan Cohen will by proxy acquire the new Bed Bath and Beyond, previously Overstock.
That'd be beautiful.
Yeah, I'm glad you mentioned ComputerShare as well, because the other piece of information anecdotally that has been coming out over and over throughout the last 5 or 6 days has been that AST is no longer the transfer agent, right? But the positions have not been deleted from the brokerages, right? So that's also inconsistent with shareholders not getting any redistribution, right? So, and I believe it was Fidelity that had been informing their clients that a ComputerShare subsidiary has taken over as the new transfer agent. So, I mean, why would you be doing that if shares were just going to be erased and terminated?
It was it Mikey last night? Was he talking about that on the PP show, that he gave a call and they gave him this giant runaround? But when he called ComputerShare, they said, "Oh, well, we have your shares, but only be until the 16th." Like, what the hell does that mean? Like, why are you playing pinball with 900 million shares? Like, what is the point behind that? If you only have them for another 10 days, like, it's a way station? What is going on? Yeah.
Yeah, it's very interesting. I mean, all of it inconsistent with shares just being wiped out, and anybody that believed in this play being a total loser, right? Doesn't really pass the sniff test, especially now, right? Like with this much benefit of hindsight, I'm actually impressed at the level of determination that bears have to maintain the position that there still will be no shareholder recovery. I mean, it's borderline nonsensical at this point if you look at all of the information as a whole. But I mean, I think it's a mixture of denial, an inability to admit that you were wrong, and maybe even a little bit of personal regret on some people's, because the other thing is that these positions are locked. You can't buy anymore. You can't sell anymore. So who knows what kind of emotional feelings people are having for being led to believe that there was nothing here and not investing their own money, right? You don't know, but the idea that the same shareholder preservation has to reconcile a lot of information now that it's not effectively doing.
Yeah. Jake, Shills are saying the same about us right now. They're saying we're delusional. We don't know what's going on. Are these guys stupid? And I've never seen such a polarized play where both sides have so much unwavering conviction in their own thesis that they think the other side are delusional. It's just such an interesting setup.
Well, I had a Shill pop into my subreddit today. What I decided to do with the Shills is I screenshot their comment, I answer it, and I delete their comment, so people can then ban them entirely from the thread, from the subreddit. But he came in, he's like, "You guys can't explain like how are you going to erase $1.5 billion in debt?" I'm like, we did. The creditors get the company. Done. That's it. That's how you erase it. You can say, "Oh, you owe me $1.5 billion that I'm not going to get, or I can accept equity in the company." That's how it works. I worked for the Art Institutes of Seattle. I was the math and science teacher for them. Goldman Sachs bought Education Management Corporation, or majority holdings in Education Management Corporation, which owned the Art Institutes, which owned Brown Mackie College, College of the South, Argosy University, a whole bunch of others. They were the largest college system in the world. Like, they had hundreds of thousands of students under their umbrella. The Goldman Sachs execs did what you do in a leveraged buyout situation when you're a vulture capitalist. They sold off every asset they possibly could. We have $100 million in land. We're going to sell that and rent it back. So it's costing us money. Then we're going to give the vice president a $100 million bonus, and he's going to retire. And the next guy from Goldman Sachs is going to come in here and get his piece. And they racked up billions and billions and billions of dollars in debt. And then they're like, "Well, bankrupt, peace." And they left. And the lender had to take on this college because they weren't going to get any money out of it. They're like, "Well, I guess I'm taking on these 140 schools. Bummer." And they got stuck with it. They didn't want a college. And so they quickly were trying to sell it. And that's oftentimes how a lot of these bankruptcy plays can work, is that is that, someone reluctantly takes this stuff. Like, okay, well, I guess I'll try to figure out what to do with it. Because a bank doesn't want to run a college. They have no interest in running a college. They just want to like lend money and get paid. So, I think a lot of the short thesis people are assuming that this plays out like your run of the mill bankruptcy. And a lot of them were just treating it like a Chapter 7 anyway, where it's just going to liquidate, cease to be. The stock will sit in the warehouse forever, being seller pegged. But that was so obviously not the play in this. And they know it. You know it. I know it. Bob Dole knows it. Everybody knows it at this point. And they're just sort of deluding themselves, believing that like if I shill hard enough, some hand of God will come down and make it so that I don't have to pay back my short position. And I don't think they have a chance in hell.
So there's a short seller called Phil, and he was on a space the other day, and he said that he's played a few bankruptcy plays like this. However, getting his equity, getting his position closed after the equity's been cancelled has never been as difficult as it has been for this one. And we've been not trading for this whole week. However, on Friday, a few people have DRS'd. One person I know personally, he DRS'd 50,000 shares on Friday. What the fuck are you DRSing if we've been cancelled for a week? Short sellers have still been getting charged cost to borrow throughout the week. And it just goes to show, they spent over 2,000 hours in August alone, according to the legal fee services, using all senior level executives that are specialists in mergers, acquisitions, turnarounds, and restructuring. Why the fuck would you spend 2,000 hours? That's 35 hours a day, 7 days straight for the whole month of August with high level specialists if you're not going to complete a merger and acquisition.
Yeah. And the information we can extract out of those fee statements has already been so filtered, because in July they spent over 80 legal hours. In August they spent over 50 redacting the fee statements for privileged and confidential information. So the information we have to work with is already so dialed down from the entire vision of what's being done here. And look how much we are able to extract to make the conclusions that it will occur. So imagine if there was no redaction, right? It will be remarkable to see how it plays out. I'm very excited to know that it won't be much longer. Even the Options Clearing Corporation is acknowledging that there will be a distribution. Bears also have to contend with that. So interestingly, the Options Clearing Corporation has decided that it will be a cash distribution. So we'll see how that happens, because that really doesn't make any sense for ownership if you buy a company and then you don't own it because you just took a cash payout on it. So who actually are you giving it to? So that's funny. It rings similarly to the effective date being September 30th, as was revealed by the company, which it couldn't be because the September 30th was a Saturday and the effective date would have to be on a business day. So this cash payout kind of rings similar to that for me, that it's, on or around a cash payout for shareholders.
Yeah.
So we'll see. I'm excited. It won't be much longer, right? So the 90 days for the delisting is, I believe, tomorrow or Monday if the 90th day has to be counted on.
Yeah, some people are saying the
18th.
And I'm not sure. I never looked at the math, but some people are like, no, is it the 8th or is it the 18th?
So we looked at the SEC filing, and it was from the date that they filed the Form 25. So that does fall on tomorrow.
Okay. All right. So which means Monday. Yeah.
Yeah.
Okay.
Canadian Thanksgiving. So let's see if Teddy makes Thanksgiving great again.
Yeah. Let's you guys have any new stuff you want to add, or shall I go to the throngs here?
That's all right.
Go for it.
Okay. So FYI, this is the largest live crowd I've ever had. I'm at 2,300 of you. I've never had that many for a live show. I've done 1,000 a couple of times, but goodness gracious, which means this chat is huge and I cannot scroll through everything to find all the questions that need to be asked. I want to thank Watt DC, and a couple others who are throwing out memberships there. Thank you. So I'm going to read all the super chats if I can find them. Oh my goodness, where? Oh God, the chat's so long they've disappeared.
Well, you know what you can do is at the end, I mean, people know where to find us. They can send us messages too, or they can do it through you. And we can obviously address everyone's question with either posts on X or on Reddit, but let's get through what we got.
Let's get through what we got here. So Avocados, remember when RC couldn't get a hold of Microsoft Head and called him out on Twitter And the head of Oracle replied to Ryan that he would love to help him with the juggernaut you are building. So there you go.
They talked about
that
Ross
Oracle
Grant.
guy owns 600,000 shares of Bed Bath, by the way.
Yeah,
1.2 million now.
Yeah. So he is all right. He's that juggernaut is building. Okay. Oh my gosh, this chat is so long that like everything has vanished. That is, I've never had this so big before. I've never had such a big chat in my life.
Well, it just goes to show that people are craving information, right?
Yeah.
Like it's becoming more and more obvious that you can't trust the news media to give you actual information that's not a paid narrative, right? So I think the interest speaks for the fact that people are just want to get actual information that they can go do their own research from, right?
Oh, here we go. I found out how to get him back. Fantastic. Yay. Okay. Man, Watt DC gave a whole bunch of memberships. Thank you, Watt. Starbuckle pre-show tunes. Okay, I don't know what that is. Mo Money. Hi, Jake and Sal. I hope Sal had crumpet and tea. Did you? It's like, was it like 2 a.m. where you are?
Yeah, that's all we eat. Breakfast, lunch, and dinner. We just food and crumpets and tea. Usually I pour the tea onto the
just
crumpet.
Inject it into your veins.
Soggy.
Rock solid. Shout out to all BBY holders. It's been an honor holding with you. Dr. Derp Derp. Jake, after Moas, will you sit on the couch?
Yeah, I do.
Are you allowed? It's a nice white couch. Might not be allowed on it.
Yeah. It's reserved for after. Yeah, I'll move to the couch.
And then Momo says Jake's wife told him he's not allowed to sit on the couch. Oh, he has to sit on the floor. Windows update? Don't know what that means. No name. Ryan's character, as we know it, does not align with him leaving us holding the bag. I am proud to be invested in someone like Ryan. I'm grateful for you and all the work you put in. Let's grab drinks for you all and all the work you put in. Let's grab drinks when this is all over. Fantastic. More money to PP transform into a black dog. I also don't know what that means. I am like, people throw out references and I have no clue what's going on at all.
You've got one coming up that I saw that.
Activist investors don't sell because someone isn't aligning with them. They sell once the company has implemented the recommendations. There you go. Exactly.
So I'm glad that brought a thought for me. So activist investor was one of the most interesting pieces of language in docket 2310, where there's an entire page dedicated to conversations with the activist investor, researching news articles about the activist investor, and all sorts of,
like who could possibly
named cryptically.
Yeah, I mean, there's only 2 famous people who could possibly be in this play that could be considered activist investors.
Yeah, and they're researching into the lawsuit against the activist investor.
Yeah,
and it's funny because Judith Cohen, coincidental last name, was an individual who was suing Ryan Cohen after the company entered bankruptcy. I believe it was for the short swing rule. So accusing him that his purchase in March and his sale in August qualified for the short swing rule, and she wanted to sue him for the profits. But guess what? In discovery, she drops her lawsuit. Yep. Why? Well, maybe because she discovered that despite the sale in August, maybe that wasn't the critical piece, but then Hudson Bay is looked into for qualifying for the short swing rule as well. And I assume she got to discovery, or her attorneys got for professional eyes only, and realized there's no suit, and she drops the lawsuit randomly, right? Yeah. So interesting.
Delicious. Where's Plur? In there somewhere. I don't know. That's from Thunder's Queefer. That's a great name. E. Williams.
A lot of familiar names here.
Yeah, E. Williams. Who? Thanks, Gregory T. again. Eat a man like Houston Wade. Oh, Gregory gave out some memberships as well. Avocados. Oh, we did the avocados one. What gave you some more memberships? Pickles for dinner. I'm here for seeing you on the PP show last night. PP DMs us feet pics after we donate. Do you do the same? I do. It does require at least a minimum $1 donation. And usually it's when people want them in the wintertime when I'm wearing cozy socks. I'm just wearing some Costco socks right now. They're not that sexy.
One foot for $5, 2 feet for $2, right?
Exactly. Yeah. If you have to ask, you can't afford it. And for $100, I'll show you my messed up toenail from when I dropped a ski boot on it 9 years ago. you can get that sucker. And Bill Coin, will this affect GME? I would assume the entire basket will explode if these guys face liquidation. So yes. And who knows
I
if
should
GME will be doing some sort of buyout. Who knows what they're doing with this whole thing? We won't know until stuff gets filed. But gentlemen,
I would agree. I think that the short position is untenable and unmanageable for Bed Bath. I think it's oversold. I think there's a lot of naked positions and phantom positions, and I believe margin calls will fail. And then, I mean, liquidation is not selective, right? Liquidation is across the board. And if any of these parties are also short on other tickers, you can see corresponding price action on those, right? Because as soon as these positions have to be reconciled, you have to understand that every short position has to be closed and every phantom position has to be closed before a single real short position is closed. So if these are shorted 2-to-1, 3-to-1, 5-to-1, naked shorts for each actual short position, you're looking in it's unmanageable. And it will be cascading liquidations across the board, and there will be a lot of impact peripherally into other tickers that are also overshorted or targeted by the same funds for sure. Absolutely.
I'm really curious to find out just how many family funds are going to get the axe on this, because we don't hear about family funds. The only family fund has made the news in the last 3 years was Bill Hwang. And he
refused to answer the phone.
Yeah, he refused because he knew that. He's like, oh, that's the ominous ring. The red phone is ringing. I don't know if I want to answer that.
Yeah, just playing up.
Yeah, and what he had done was he did his 30-to-1 margin, but he took his assets and he took them to each bank he could. So he maximized his leverage with 5 different banks, and none of those banks knew about the others. So he's not the only one who's probably doing stuff like that. I'm sure, we've got in the US, I forget how many, it's like 4,000 family funds or something. And 700 of those manage assets over $1 billion. The numbers are crazy. And how much margin has been given to those guys is like 7 trillion in margin has been given out. So if you're 30-to-1 on $7 trillion, and all of a sudden a stock that you shorted at $2 is $10,000, the globe doesn't have the GDP to handle that. So
the derivatives market is a time bomb. And it'll be cataclysmic. I think the thing is the leverage and the amount of margin is what's going to drive a lot of this price discovery, and it will just evaporate these funds quicker than they can react, just because the percentage change will just be unmanageable.
Yeah, and then
any other assets that they can throw into to contain the bleeding, right?
And then it'll start to liquidate the prime brokers who are the next in line, and those guys, we can have bank failures here and there. We can't vaporize every investment bank in the country or in the world possibly all at once. Because we know, from Bill Hwang, we know that Nomura, Credit Suisse, they're going. These investors are using international banks, and you have problems like Switzerland. Switzerland does not have the GDP or the population to handle the collapse of a bank as big as Credit Suisse. It comes out. We did the math months ago on my show, but it was $20,000 per citizen of Switzerland to bail out Credit Suisse, which is why UBS had to take them on. And even then they're like, oh my God, there's so much red here. And they announced they're going to be doing $30 billion in sales of blue chips. They need cash, and it's not going to be enough.
The positions are untenable. And as soon as margin calls are failed and it's forced liquidated, like I said, liquidation is not selective.
Yep.
And the margin is going to be what sinks a lot of these funds and companies, because it's just the change will occur so drastically that they'll be wiped out before they know it.
Yeah, it'll be that afternoon.
The disclosure on any of the information. We're going to be in our 90s by the time that information gets out. A lot of the people relevant are not going to care. Who the fuck puts a 50-year disclosure on a company that essentially has a lot of toxic debt bags?
Yeah. I wouldn't doubt we'll see, the government have to float 100-year bonds and stuff like that to take care of this stuff. I'm an astronomy professor. My brain still can't handle the numbers that are going to be involved if a MOAS happens. I deal with billions of light years on a daily basis, and even then, just the numbers of zeros. My calculator can't handle it. What could happen? So it's gonna be wild. I hope I need to get a seatbelt for this thing. I think.
Yeah, you're gonna have to convert your portfolio to astronomical units. I think.
Exactly. Yeah. How many parsecs is my portfolio right now? Yeah. All right. Anybody got some other stuff here for the gentleman? We've been going at it for an hour and a half now. It's breezed right on by. Holy shit, there's 2,800 of you in here? I have never... My God, man. I should have had you guys on sooner.
The worst thing is I'm only about 5 pages into the 20-page document that I've written.
Well, fuck. We got time. If your voice can hold out, we'll listen to the
oxygen capacity to go through all of it.
Well, any other big points you want to bring up?
So I mean, I can get back into it. Kind of messes up the chronology of the show that we've had so far.
Yeah.
Essentially, it's about. Let me just got so many pages in this document. So if
Oh, sorry. If you,
No,
I
go,
was gonna say, if you didn't have it, we could go through some more questions. But if you do, then never mind.
Yeah. Houston, are you done with the chats or the questions over there?
I got current super chats. If people want to pile some more in there,
okay, cool.
Yeah. Okay, you're up to date. Yeah. Okay, that's great. So I just wanted to revisit the events of 22 from September. So September 22, GameStop pulled their credit rating, something that you would kind of do typically before making a strategic acquisition. September 22, RC Ventures SIC code was also updated to match Bed Bath & Beyond's. October the 18th, 2022. This is the day Ryan Cohen tweeted a picture of him standing next to Carl fucking Icahn. And that picture gave Wall Street nightmares and it gave investors dreams. We had the most legendary activist investor with a strong history in overcoming corrupt C-suites, littered with overpaid executives. And he's got a history of turning around underperforming businesses, profiting on the gap between undervalued and market value. Ryan Cohen has referred to himself as Ryan Cohen by day and Warren Icahn by night. And it's evident that he's drawn inspiration from Icahn. He's applied it to his investment strategies. I mean, he used his proxy solicitors to make the initial move into the Bed Bath board. I strongly believe he continued his efforts through the indirect route of a leveraged buyout, which we will see over the next few weeks, hopefully. Houston, have you seen The Restless Billionaire?
The Restless Billionaire? No.
Okay, I'd highly recommend giving it a watch because I tried to understand the type of man Icahn is and the type of man Ryan Cohen would aspire to be. And I really started adding to my position after watching The Restless Billionaire. So it's a documentary on Icahn, and it just goes to show you the type of investor Ryan Cohen is aspiring to be like. And there's so much similarities there. They talk about reprehensibility, overpaid executives. And if you look at Ryan Cohen's speech from the GameStop shareholder meeting this year, when he talks about overpaid executives being predictable and reprehensible, a lot of it is echoed in Icahn and the way that he's built his career. So I would highly recommend giving a watch to everyone. I think everyone that's watched it has kind of got an idea of the type of man Ryan Cohen aspires to be. So then we move forward to November the 19th, 2022. Teddy.com is launched. We've got a premium tier business domain that fits Chewy. I can't see the website just being for books to commemorate the late Ted Cohen. And the books also contain some sort of Easter eggs to investors, mentioning stocks as socks. The whole Alibaba board is actually depicted there. Spidey found that, and it was very interesting. And there's references to piggy banks in China and other stuff. And they seem more targeted to an investor base than to children. So I believe the website is a placeholder for the Web3 giant that Ryan Cohen's building and working towards. And if you go on the Wayback Machine, you look previous to November 2022, you can see that he was using it for commerce. There was pictures of different items for children, and it was Teddy.com, and there are links to Amazon products. So he's obviously been planning this and had to readjust his strategy. Teddy Holdings LLC is a Delaware company and is registered as a financial holding company or a bank, which is very interesting. December 2022, Matt Furlong, during the Q3 earnings call, said, if a strategic asset or complementary business becomes available in the right price range, we want to be able to explore those acquisitions. December 2022, the 20th, David Castin was appointed to Bed Bath & Beyond. His experience was advising C-suites on enterprise-wide issues, including extraordinary corporate transactions such as going public, equity and debt offerings, restructurings, and merger and acquisition transactions, managing through turnarounds, reinventions, growth, startups, shareholder activism, divestitures, restructurings, and bankruptcy. And to me, it seemed like a strategic hire, especially for a company heading into a distressed period with poor quarter four performance. I wanted to go into the events of January 2023, but there's just so much here to cover. I think I'm gonna pause on it for now. So yeah, I mean, you guys, if there's anything you wanted to talk about from that bit.
Yeah. What do you think will be the next documents that we'll see? Like say Monday, if
S1, 10K, or an S4.
Yeah. And what do you think? So S1 would largely probably involve like, this is the name of the new ticker, this is a distribution. What do you think would be in the S4? Like,
I haven't really thought about too much what's into it. Let me just double check. I get my forms mixed up sometimes as well.
I'll constantly. Yeah.
I think so. According to SEC 240.12D2, the order that has to happen here is the SEC exemption for the new ticker has to be lifted. So there will be a filing documenting the ticker and probably the ratio of distribution to old equity. And then after that's revealed, then you can have the delisting of the old ticker. But since you know that the old ticker will be delisted after 90 days, that kind of solidifies the timeline, right? So either on Sunday or on Monday, if the day 91 is the day that the actual delisting occurs, I don't know if you count the 90th day, but the new ticker will be revealed because the exemption under Rule 1145 will expire. So that'll be filed. The delisting will occur, and then the ownership and everything else will be revealed once the new ticker's there. And then, I mean, within a couple days at most, if not that day or the day after, that new security will enter the market and be tradable again, however that occurs. You know, I think that all options are really open. I really see that just as equally as I see this returning to the NASDAQ, you can have a blockchain component like Overstock did, right, with the digital non-fungible dividend that can't be replicated or screwed with, right, which will, of course, establish really good price discovery because everyone's going to have to go to market and purchase the new shares in order to obtain such a dividend, right? So that's a possibility. A blockchain exchange is a possibility. You know, BSTX is regulated by the SEC. You know, there's a lot of integration with ComputerShare is already ready for the blockchain. Mellon Investor Services, which is the subsidiary that Fidelity is telling everyone will be the new transfer agent, they're also blockchain integrated. So a lot of this, you know, the bear thesis around the blockchain idea has been because the integration for everyday people into their brokerage accounts will be too difficult or unmanageable. But I really think a lot of that will happen on the back end, and the network and the infrastructure is already there. And I think it can be a pretty seamless experience just as easily for people in their brokerage account. I think the accountability piece of the non-fungible blockchain component can be handled outside of the brokerages. And I think just what you'll have on the brokerages is the price discovery, right, and the tradability. So any possibility is a good one.
Yeah, I mean, the big brokerages are now allowing trading of blockchain coins and tokens on their platforms. You know, Fidelity now has theirs. Robinhood's been doing it for a while. A lot of them were locked in and were trading like within the platform, but using price reporting from other exchanges. But now you can send these things from one exchange to another if you want. It'd be really interesting because, like, one of the things I've talked about when people ask about crypto is I'm like, well, you don't get a dividend from crypto. It's like you know, oh, but there's only 21 million Bitcoin. Cool. There's only 14 million shares of costs. Like, you own a company and that company makes things and there's a possibility of getting a dividend from it. Cost is rare. Why is Bitcoin's rarity, you know, make it much more valuable than costs? And so all of a sudden having a blockchain stock that's a potential to receive dividends and other payouts and has tangible value, owns real estate and IP, I think that is a much better use of that technology than, you know, dog coins. It will be amazing to implement it because it will, if the SEC doesn't have the stones to do it, it will make it impossible to naked short these things if you cannot fund the blockchain. So it's very tantalizing. Yeah.
I think
they're
that's the
aware.
best application of the blockchain is the certificate of authenticity, right? So you can
Yeah.
only actually have what exists and what's documented
Mm-hmm.
and what you have a receipt for.
Yeah. Sal?
I think they're just not prepared for the fallout of it. That's the only thing. They're aware
Mhm.
of the technology, they're aware of the fraud and the decades of over leveraging complicit with boards and SEC officials. They're just not prepared for the ramifications of it,
Yeah.
especially when there's so much social, political, geopolitical events going on in the world right now. I
Yeah.
think the fallout would change the world order officially.
Yeah, I think that's one of the big reasons why we haven't seen any SEC proposed rules with actual teeth. We've seen some stuff here and there, but nothing that would like truly upend the way private equity's been running for 30 years. I mean,
I think politically
Yeah.
they need a scapegoat, they need a narrative, they need something to blame. They can't
Yeah.
say, "Oh, we haven't really regulated all of these 1% for so long." There needs to be a war or a new virus
Yeah.
or UFOs or UAPs. There needs to be something to blame for it. They're not going to take responsibility because
no,
it would lead to riots and
yeah,
political uproar.
I think they need a market collapse to happen for them to put these rules in. They need to go. We did a post-mortem, everybody. We looked at all the problems and causes, and we discovered it was these guys over here. Well, we weren't regulating, so we're going to regulate them now. That's usually how these rules get put in place. Is they fucked up so bad. But if they put those rules in now, it would crash the economy. Then they would get blamed for crashing the economy. So they have to wait for the economy to do its cycle, and then they can do something about this. They sort of
look like heroes.
Yeah,
right?
they sort of tried in 08, 09. They made it illegal to naked short banks and financial institutions. Like, okay, it's bad for them. What about the rest of us? So they didn't quite have the stones to go all the way on that one. But I think the calamity that's coming is going to be so large they won't have a choice.
Yeah.
I've got
I think
something interesting I wanted to bring up yesterday, actually, with Jake. But Jake, someone tried to hack into his ex midway into our space yesterday, so I didn't get to talk to you about it. I can't share my screen at the moment. However, if someone could
here, let me multiple participants can share. Okay, so I think I just turned it on for you.
No, my settings are messed up. Anytime I try
okay.
to fix video settings, it just lags out the whole Zoom call.
All right.
However, there's a definition I wanted to look up. It's called poop and scoop on Investopedia.
Poop and scoop.
Yeah, I'm not sure if anyone's seen it before.
Investopedia.
I love it already.
So it's just interesting because Ryan Cohen has previously tweeted poop emojis quite a lot.
Yep.
And we've seen ice cream quite a lot. I think poop is it's explained in this Investopedia article. Scoop is what I think we're about to see. They're going to scoop up the company. And this is a tactic that short sellers use. And when I looked at this, it actually makes sense with what we've been seeing.
So this is, I'm sharing it now. Poop and scoop, what it is, how it works. Example.
Yeah.
Poop and scoop occurs.
Read it out. Tell me your thoughts.
Yeah. A poop and scoop occurs when a small group of informed people attempts to drive down a stock's price by spreading false information, rumors, and otherwise damaging information. They spread poop so they can then buy the stock at a lower price. Interesting. So he throws out poop emojis probably whenever something shitty gets written, huh?
Yeah.
Interesting.
So it's similar to short and distort.
Yeah.
So I just looked further down and they've compared it, and it says a similar illegal tactic employed by unethical traders is short and distort. Investors short sell the security and then talk the value down by spreading misinformation for a profit instead of buying the stocks at a discount when false information causes the price to drop. So then the difference is with the other tactic, they don't buy the stock back. However, with this, they would push it down and then buy it back and make a profit.
Yeah.
And we've seen a lot of ice cream talk from Polte recently, Bill Polte, and I think that the ice cream is relevant to scooping up the company at the price it's at now and turning it around.
Interesting. Okay, we got more chats here. After Moas, I'm getting a hair transplant, so I look as handsome as Canadian as Jake. You have what in the swimming world would call water polo hair. That's what.
There you go.
Seatbelt fund, buckle up. Thank you for controlled chaos. Bex, how will this play impact non-basket shorted stocks like NOLLs and AMC unnameable? Sorry, Acme unnameable. Acme oftentimes refers to a company my brother works for that I can't talk about. So, I mean, I think if you guys get rich, you're going to be buying up everything that interests you. You're going to buy up the stocks that you think are going to be future plays. You're going to be buying up the discounts that will probably popping up as liquidation happens. You're probably buying up things like gold and whatever, because, you know, if all this liquidation happens, it's going to collapse the Dow and everyone's going to be pulling their hair out, which is a great time to scoop up the Dow. So, I don't know.
I think, you know, the idea of a financial cataclysm is a bit one-sided and a bit, it's not looking at the full picture, because I think if you consider, like, let me use broad terms and say a redistribution of wealth, I think the people on this trade that stand to gain are more inclined to utilize their fresh capital to invest in their communities and invest in businesses and stimulate the economy by making expenses and purchases for themselves, whereas the current system is usually, you know, stereotypically high, you know, generalizing here, but is more so the capital is hoarded and it's not you know, utilized and spread throughout the economy as much. So, you know, the idea that, oh my gosh, retail investors ruin the world is not something I subscribe to, because I think people will be very active in using their capital proceeds. And like I said, either it's locally investing in their communities and small businesses, or you know, purchasing assets for passive income for the future, for themselves and for others around them, right? So I see it more of a, you know, the idea that the capital markets are net zero, right?
Yeah.
So no one's, you know, the money's just going from one side to another, and I think like I said, the wealth will be more active, from people that stand to gain.
Yeah, the one side already has their house in the Hamptons, their house in Miami, their house in Maui. Like, the other side doesn't have that stuff yet. So they're going to go out and they're going to buy the things they've always dreamed of. Yeah, they'll reinvest. They'll do things like that. They'll make sure that, you know, their brother's dream of owning a restaurant happens, that, you know, the parents are taken care of and not going to be in the shittiest nursing home they've ever seen. Like, there will be a lot of, I would say, like, personal love distributed to the people around them. And then you also see, you know, the community center get built that has a pool and a hockey rink and a gymnasium in it, so that finally there's a place for the kids to go. I'm sure we'll see that type of stuff. I mean, when Roaring Kitty got his big win, one of the first things he did was he built a basketball court for his neighborhood. So, you know, the things like that, I think you're right. I think that's a good view as to where a lot of that wealth will go off to. I mean, in my chat, constantly people are talking about, like, creating foundations and charities and nonprofits and things with their winnings, because they'll finally have the chance to be the change they've always wanted someone else to do, and they'll have the comfortability to do it. So yeah,
I think people will see very quickly how rewarding it is. So I believe, you know, capital will be much more active in the future.
I mean, how much money do you need, really? Like, I got a roof over my head, I got a car that runs, I've got a cool dog. I'm pretty satisfied in those categories.
It's funny how people will very quickly realize that it's not as much as they think.
Mark Wood, HW, you got two of PP Show's best ringers representing us, them. So proud of these young men. Wondering if we can still DRS, and with whom? As you said, that people had DRS yesterday, right? So apparently, and with whom?
It varied from broker to broker. Some of them were denying it. So I believe people were saying that Schwab was denying it, but that Fidelity was allowing it. So I guess it just depends.
All right. And Fidelity said, Fidelity's also said who it was, BNY Mellon Investor Securities, right?
So Mellon Investor Services used to be owned by the BNY Mellon, but they sold it to ComputerShare in 2012. So they're not affiliated with it anymore. But ComputerShare had done that to get a footprint in the American jurisdiction, right? Because they're based out of Australia. So it provided them transfer agent services locally for the U.S. capital markets, and it was a big acquisition for them. But
Word. Watt DTC or Watt DC, who's gifted a whole bunch of memberships to people today. PSA for the new fans: Tuesday streams are charity day if you're looking to fill the PP-shaped hole in your day. It's the last Tuesday of the month. That's Charity Tuesday. I should remind because we've got 3,100 people here. Holy smokes, that means a lot of new viewers. Charity Tuesday is Halloween this year, so it's a nice, wonderful day. You'll get to see me in some sexy outfit. I haven't quite determined yet what it will be. We've raised $40-something thousand for charity over the last 2 years. Our most recent were disaster relief. We did money for disaster relief for Maui. Did almost $3,000 there. We did a couple of grand for a disaster relief in Morocco and Libya after the earthquake and floods there. I'm hoping there's no disasters happening next couple of weeks. I'm trying to find a really nice small charity that doesn't have a very large endowment. And if shit's the fan with BBBY in the next couple of weeks, I'm hoping we can make that charity's day by like funding them for an entire year or something. So I'm still doing my research to figure out who is associated with YouTube that we can. You have to file with YouTube for them to be able to do the charity stuff with them. But please, Halloween, swing by the show, especially where we will raise a buttload of money for someone who does wonderful work. And I know you will all love it, especially since I got 3,100 of you here to tell you Charity Tuesday. We raise way more on Charity Tuesday than I ever make from YouTube. So it's my favorite show to do every month. So stay tuned for that. Bill Cohen, after Moas, I'm having a full body transplant. Isn't that what that one billionaire guy is doing? He's trying to like suck all the blood out of his 18-year-old son to stay young forever. What happens when his son gets old? That's what I want to know. Michael David Wade, I love that you just said thank you. Love what you just said. Thank you, Jake and Sal and Cake. Your honest folds. You guys, I think I meant to say Jake and Cake. I don't know. You guys' character says it all. Ape out. Cool. Unless we have more people want to jump in there. By all means, throw some more questions in there. We'll try to answer them. I mean, I'll hold on to these guys for as long as they're willing to stay here, but we've been here 2 hours already. So, I'm sure Sal's voice is toast.
I'm getting a 2 minute or a 5 minute warning.
Okay. All right.
From the family too, but I'm more than happy to come back if people want to. Find us or write down questions for you, and we can chat again. It's no big deal. We can set up a Q&A if you guys can think of stuff for later. So anyway, I'll let you guys go. Enjoy the rest of your Saturday or your Sunday there, Sal. I'm sure you sleep during, like you're like a vampire or something. Your picture shouldn't be a lion smoking a cigar. It should be like Nosferatu.
The sleeping pattern's been more aligned with US times recently, especially over the last few months with the space and the PP show. So it's interesting.
All right, cool. Thank you, gentlemen. Thank you so much, and have a great one. I'll let you guys go. All right.
Thank you for having us, and we really appreciate all the feedback from your viewers. It's always nice to just chat and give people info and answer questions. It helps everybody both ways, right? Because it helps me recall the info, and if I help somebody understand something they didn't get, then that's great too. And at the end of the day, I'd love to be proven wrong about anything that I talk about, because I'm not just trying to here to feed my own bias or anything, right? But I'd love to hear someone disprove any of the things we've talked about today. So please, I encourage you to do so.
All right, thank you so much, Sal. Any last words?
Yeah, so thank you, Houston. You're a great host today, very professional, and it was good to just have a great conversation about what's going on, especially because you've been around for quite a while, so you're seeing the similarities. Thank you to Daphne for helping set this up. She reached out to me on X originally, and I wanted.
Yes, thank you, Daphne. Yes.
Yeah, I wanted to get this done before Monday, just because I want everyone to know that we are still as confident. I didn't want it to look like the news came out, so we got louder. We've been just as loud for the last few weeks and months. And this is why the mainstream media and Doug Sifu are particularly upset.
Oh, we never got to talk about how Doug Sifu is having a conniption, did we? We'll save that. Well, yeah.
we'll save it. I'm sure he's going to get worse over the next few weeks.
Just a beautiful read. I got kicked off of X, so all I can do is read, and I can't join in, which is heartbreaking to me. But he's
easily triggered. Yes. I've got some plans to wind him up a bit over the next few weeks, and like a stupid puppet, he's going to fall for it.
Excellent.
All right. Well, thank you very much, Houston.
Thank you.
Jake, Catch you guys later.
All right. Have a great one.
Yeah,
See you
thank
guys.
for having us, Houston. See you guys.
Bye. All right, everybody. I want to thank these two wonderful individuals for stopping by, giving us the lowdown, dirty dirt. I mean, they got the timeline, and they can show that the timeline has very interesting things in there that can only lead to certain logical conclusions. I can also move the cat over to the corner again, I think. There we go. There, the pet cam. Hi, monkey. You never got your treat, did you? So yeah, thank you, everybody. Got a couple chats that popped in here last second. Maui Sam says, happy birthday, Wade. Come on, chat, show the love for these guys. Many mahalos and alohas to all. P.S. Sal, where you from? Oh, we didn't get that one in there. Oh, he'll have to answer you later. And Iwi Williams of there's nothing more foolish than cat litter in video games. Not for long. This is the best time in human history to be alive. When Seymour Butts? When is Seymour Butts? And someone else asked for toe picks, but that one gone. Anyway, so thank you, everybody. Thanks for stopping by and spending your Saturday. It's a very glorious day here. Monkey's pissed at me for not having taken her to the beach today, so I might get a last little hour of daylight I can out there. I'll be doing a Monday show. I'll see you guys Monday afternoon. And yeah, hopefully we'll have cool news to talk about if things got dropped. Awesome. Thank you, everybody. Have a great night. And I never got to do an intro, so we'll do an outro. Shabam. Oh, nope, that didn't play. How about that? There we go.